Welcome back to the Digital Asset Report. It's been another whirlwind week in the world of digital assets. Whether you're an investor, builder, policymaker, or just crypto curious, there's no denying the momentum building across this ecosystem right now. We're seeing coordinated moves from regulators, major institutions, city governments, and high-profile political figures, together painting a picture of not just a market recovering, but a market transforming. Let's start in Washington, where the winds of regulatory change are picking up. Newly sworn-in SEC Chair Paul Atkins used his first major public appearance to set the tone for a more rational, constructive approach to crypto oversight. Atkins said he plans to create a clear framework for how tokens, especially those that might be considered securities, are issued and traded in the US. His message is clarity, not crackdowns. And he also hinted at a shift that could have massive implications. That is, tweaking the rules so that broker-dealers running alternative trading systems might also be allowed to facilitate trading in assets like Bitcoin and Ethereum, which have long been treated differently from securities. It's the first real sign that the SEC might be ready to accommodate the mixed asset reality of modern digital finance.
A key priority of my chairmanship will be to develop a rational regulatory framework for crypto asset markets that establishes clear rules of the road for issuance, custody, and trading of crypto assets, while continuing to discourage bad actors from violating the law. Clear rules of the road are necessary for investor protection against fraud, not the least to help them identify scams that do not comport with the law.
This marks a significant departure from the SEC under Biden, which leaned heavily on enforcement. Lawsuits against Coinbase, Kraken, and others are now being paused or withdrawn. Instead of fighting crypto companies in court, the new SEC leadership appears more interested in giving them a seat at the table. And if you're wondering who's leaning all the way in, look no further than the Trump family. Eric Trump and Donald Trump Jr. just announced that their Bitcoin mining company, American Bitcoin, is going public via a merger with NASDAQ-listed Griffin Digital Mining. The new company will trade under the ticker symbol ABTC, and existing American Bitcoin shareholders, including the Trumps, will retain 98% of ownership. This move is not just about access to public markets, it's about branding, positioning, and narrative. The investor pitch deck features a bold photo of Eric Trump and the headline, "Crypto is the future, America must lead the way." As Chief Strategy Officer, Trump is not pulling punches. He's calling Bitcoin the financial infrastructure of the future, and he's framing this public listing as a bigger push for US dominance in global mining. Now let's turn to the institutions. Michael Saylor's strategy, which has become the poster child for corporate Bitcoin adoption, just made one of the largest weekly buys ever, 13,390 BTC for $1.34 billion. That brings its total holding to 568,840 Bitcoin, now worth over $58 billion. Saylor's message is, Bitcoin is the most efficient store of value on Earth, and if you're sitting on piles of cash or considering a stock buyback, you're doing it wrong. At Bitcoin for Corporations, part of the Strategy World 2025 event, Saylor challenged companies like Microsoft to rethink their capital strategy. He said, and I quote, "Buying Bitcoin would be 10 times better than buying their own stock." Over the last 5 years, Microsoft has returned 18% annually, a solid performance by any measure, but Bitcoin has returned 62% annualized. That's not just a slight edge, that's a whole new asset class outpacing the legacy system. Zooming out to the broader market, Ethereum has been having a moment of its own. In just 7 days, ETH has rocketed up 42%, breaking through the 2,500 mark for the first time since March. The rally is being fueled by a combination of tailwinds, those being the successful Pectra upgrade, increased institutional adoption, and some much-needed macro relief. Ethereum's network upgrade last week unlocked new features that improve wallet functionality, validator efficiency, and layer 2 integration, making the blockchain more scalable and user-friendly. And now, a quick check-in with New York City, where the mayor, Eric Adams, is doubling down on crypto innovation. At a press briefing on Monday, Adams made a direct call to action for crypto companies. Come build in New York. This is the Empire State, he said, and we should be building empires in the crypto space.
My goal remains the same as it was on day one as mayor, making New York City the crypto capital of the globe. And as you remember, I supported crypto long before any of my mayoral peers. I was the first American mayor to have my initial 3 paychecks converted into crypto way back in 2022. Many people laughed at me, and all I can say is, who's laughing now?
Adams is planning to host the city's first crypto summit next week, an effort to show that NYC is not just open for business, but eager to lead. Adams also acknowledged the need for smart regulation, admitting that the notoriously difficult BIT license might have gone too far in stifling innovation. While reaffirming the importance of consumer protections, he plainly stated overregulation can hurt this industry, and we don't want that to happen. His tone is pragmatic but optimistic, striking the balance between oversight and opportunity. And if he gets his way, New York could become a haven for crypto entrepreneurs, just like Miami and Austin have in recent years. So to sum it up, in just the last few days, we've seen federal regulators recalibrate, political families go all in, institutions double down, asset prices break out, and America's largest city make a direct pitch to the crypto industry. The momentum is real, and more importantly, it's coordinated. Regulation, infrastructure, capital markets, and public perception, they're all moving in the same direction. If this week is any sign of what's to come, we are not just witnessing another bull run, we're watching the next era of digital finance take shape. That's all for today. Thanks for watching. If you enjoyed this video, be sure to give us a like and a follow and head over to bitgo.com to learn even more.